All right, look, so in this video, I am going to explain what a crypto bear market is, because a lot of people out there have this confused, and I get it, I really do. Crypto is very different than traditional markets, but also, even within crypto, people don't really understand what a bear market is, when to call it, when it is, when it's not. That's what I want to do in this video. I'm also going to show you how we can have mini bull markets in overall bear markets, okay? Because I get a lot of comments sometimes challenging my calls, and I realized people are just confused, and it's not that they're wrong. Well, they're wrong, but it's not because they're stupid, but it's because people haven't explained this, okay? So in order to understand, let me just show you the charts real quick, tell you when we actually entered a bear market, how we are not in a bear market in the short term right now, even though the overall markets, we are in a bear market. I know that sounds confusing, okay? I know it sounds crazy. Bear with me, let me explain. All right, so this is the Bitcoin chart over here. We actually topped out where we said we're gonna go to 120, 140,000 this bull market, and we actually topped out at about 126,000, well, 470. Now we actually came down over here and we expected to come back up and meet this all-time highs one more time before either coming down lower or continuing to the upside. As you can see, we broke down over here. We actually exited at $117,000. Bought the dip so we can come back up, but we failed, so we exited again at $107,000 once we broke under $107,000. As a matter of fact, we also exited at $112,000. That's when I made that video saying that the line in the sand is not $110,000 but $112,000. If you remember that Ivan on Tech reply video I did, with all respect to Ivan, I just thought it was a different level we should be looking at, and I turned out to be right. Now, once we broke under $100,000, we actually bought the bounce over here. We came back up. I was expecting after this higher low to keep on going up. We did not. We had very strong resistance at the mid-range here. And that's pretty much when I said the rally is over, and that's when we came back down. I anticipated we're gonna break these lows over here and enter a bear market, and we did. Now, notice I said I anticipate we're gonna break the lows over here and enter a bear market. Why? Because that's where structure broke. We entered a bear market when this level here broke. Let me show you so you understand. This here, which by the way, coincides with the top of the range right here that we currently broke out with. More on that later. But once we broke under this, that is a bear market. This is breaking structure. Until that happened, we rallied up, came down, formed a higher low, and then we played in this range. There was no bear market call over here. The bear market was anticipated when we broke 80K, because the likelihood of 74,000 breaking, which was structure breaking, was indeed the level we are looking at for a bear market. Hey, Paul from the future here. Listen, I was just editing the video and I realized that my Greek Tourette's jumped out, where I get very enthusiastic and I really deep dive. And I realized that a lot of you may not want to hear all of that. I go into what bear markets are, price structure is, what the price is doing right now, where I see the price going, what to look for in May and June and so on. But I realize a lot of you just want the answer, what is a bear market in crypto, right? So what I did was I put an article down below in the description that answers that in more detail and also goes into what I say in the video. So if you don't want to watch the video, I get it, that's fine. Get your answer in the description down below. There's an article there that explains everything. And yeah, I hope that helps, okay? I hope that helps. I'll also try and put chapters down there as well in the description if you want to skip ahead. So with that said, I'm gonna go get back into editing and yeah, enjoy the rest of the video. And by the way, I'll do some analysis later on the price we're having right now in case you're watching this video. This is an evergreen video, it's a long-term video, but I might do some analysis for you if you're watching this anyway, so stay for that because I have some news on where I think this market is heading. So right now we're in a bear market until proven otherwise. That was the verdict last week. But right now, we are in a bull market. And you might say, Paul, how can we be in a bull market because we still have a year left of a bear market? And that is the problem. That is where most people are getting confused in crypto. Listen, crypto has a 4-year cycle. We typically have a year or so of a bear market in a 4-year cycle. And that's why people are calling this a bear market and may actually miss the move. I'm not saying the move is happening now, stay later on for that, but that's why most people miss this move or moves and get confused. The 4-year cycle, if you have a year of a bear market, you can still have bull markets within that bear market. You can call them bear market rallies. Yes, you can do that. But from the moment it gets above structure and holds above structure, that is a bull market. Yes, it may be a bull market within a longer term bear market, but nevertheless, it's a bull market. For example, I am saying this is a bull rally, and if we can get above 80,000, hold 80,000 and continue to the upside, it has the potential of turning into a bull market. Okay? That's just my verdict because I see things a little bit differently than most people out there. But the basics are, this is a bull market within a bear market. And yes, it can continue into a bull market. We don't know that. We don't know if the 4-year cycle will ever break. We always go by the 4-year cycle until proven otherwise on this channel. That's how we've been so successful so far. Does that make sense? Okay, so we are in a bull market or a bear market rally or a bull rally until it becomes a bull market within a bear market. Okay, it depends on the time frame you actually look at. All right, that is where the confusion lies. Now, you might be thinking, okay, if this is a bull market within the bear market, and if it's a short-lived rally or just a bull rally, should I be buying? Well, the answer is yes. You should have bought at $62,000 when I was telling everyone to get in from the bounce at 60K, and you should have got back in at 67,000 and 70,000 once that became support. Why? Because bear market rallies can be quite significant. They can go 20, 30, 40% up even within bear markets. And if Bitcoin can do that, imagine what some altcoins can do. Probability-wise or possibility-wise, okay? Very big difference there. So you do want to play bear market rallies, all right? Let me show you the charts now. Let me show you what I'm seeing, because this might help you overall. If you're watching this video in April, May, maybe beginning June, this will be relevant. If you're watching it after, it's still relevant for the explanation of what a bear market or bull market is in crypto, okay? So let's have a look. So right now, you can see that we formed this range over here. These two lines, the factor line actually gave you here and here, is what we call a range. This is the mid-range. Now, as you can see, we were trading within this range over here. And this is where I told you, look, bear markets don't need to drop in price to be bear markets. It's how long they can go sideways that can get you wrecked. Now, the factor line, the indicator that you're seeing that I am using, actually told you to buy right here, right below the mid-range for a swing, and again to double down with confirmation right over here when we broke above the mid-range. And the verdict is, if we come up and make this support, this line support, and continue to the upside and break the previous high over here, that more likely is continuation. And you can see that it aligns with this previous range over here. Let me just draw it out for you, right here. So we come into this range, and as long as this becomes the bottom, you can then call it a bull market. So $80,000 and above, it's a bull market. As long as this line stays gold, it's confirmation of a rally or a temporary bull market, depending how you look at it. And as long as the trend stacker is gold, you have momentum, volume, and a couple of other factors to actually support this thesis. Now, another thing a lot of people get confused by, there are many ways to call this, there are many rules. Other people look at 21 weekly moving averages, this, that, Elliott wave theory. There's a whole bunch of different ways you can call bear markets and bull markets, but pretty much they all align at the same levels, just with different indicators and different methods, okay? This is what I want to explain to you though. Right now we are in a rally that could potentially become a bull market. If we reject and this turns out to be a fake out, in other words, if the price starts coming down and we come back into this range, then yes, we are in a bear market, but understand, yes, the price can go a lot lower in a bear market to the 40, 50K level, but we could also have a bear market just ranging sideways here till the end of the year. And you have to understand, it's that range and prolonged sideways action that's the problem in bear markets. It's not the actual price drop. I would argue we had enough of a drop. I'm not saying the bottom is in, but I'm saying the bottom could be in. Even if you look at the 85, 70% drops that Bitcoin has, we've had it. Now you might say, Paul, what are you talking about? We only had a 50% drop. What are you on? What are you smoking? Yes, we had only a 50% drop, but the dollar is a lot weaker than what it used to be in prior rallies. That's why gold is stronger and Bitcoin is holding its price up higher. We may have already got a 70% drop, you're just not seeing it. And bear markets, usually Bitcoin, yes, drops 70 to 85%, but we may already be in that range. Regardless, the problem is the sideway action. The sideway action, or the lower, the longer it stays at the lows, it's the problem in bear markets. Why? Well, with projects, it's very easy. Projects, they have time to get hacked, become obsolete. Their technology or utility might become obsolete. There's new narratives that are coming out. There's a whole bunch of things. They run out of funding. They fold. There's a whole bunch of things that can go wrong in bear markets for projects. But the real disaster is you on you. Why? Your psychology. And I'm not talking about patience. I'm not talking about, oh, the price is down, woe is me. No. Most people do not understand that crypto is very, very high volatility. With high volatility, you get a lot of adrenaline and dopamine. Remember when you were playing and you were having these big ups and downs? Bitcoin could drop 40, 50% in the bear market, but you still have that rush because it goes back up. It's the same as gambling. When you're in a casino, as long as you're playing, whether you're losing or winning, you have that adrenaline and you have that rush. When you're in a bear market or when you get liquidated and you don't have these moves that can go up or down, that's what wrecks your psychology. Why? Because you're missing the dopamine, you're missing the adrenaline. You are on withdrawal symptoms. It's like drugs. I'm not joking. And you're missing that there's something missing. You become depressed. You capitulate, obviously, but you become depressed. You can even feel like doing shit you're not supposed to do because you miss that drug-like effect, that adrenaline. Even in casinos, when you're losing money, people like to brag about how much money they lost. But when you're in a bear market, there's no way to recover from that. Just like when you're in the casino, as long as you have some money and you can recover, you're feeling okay. Once you lose that last money and you can't play anymore, that's when you become depressed. That's when you go crazy. That's when you see people crying in the casino. I've seen this many times. I used to play in the casino. I still do sometimes. My dad was the director of a hotel casino in Lutraki. I know, the marketing and sales director. I know exactly how it goes down. right? I've seen a lot of shit and it's really bad. And it can wreck you, it can wreck your psychology to a point where you don't know what's going on because it's like a drug-like feeling, all right? It's very, very dangerous. That's where most people quit crypto. That's when people give up, but they never get that high again, and that wrecks them for life. There's so much shit that can go wrong with crypto in a bear market, right? It's just insane. Now, with that said, you have to understand the longer we get sideways, the longer it can wreck you. Bear markets, it's not the price drop in crypto that's dangerous, it's how long you can stay at the lows. We probably had more than enough drop because the dollar is actually lower than what it was in prior bear markets. Therefore, the price of Bitcoin is staying up kind of artificially. It's not really that high. It is, but I hope you understand what I'm saying here. And right now, last time I called for a possibility of a shorter bear market. And we may actually see the bottom soon. If 60,000 is not the bottom, we might see the bottom soon, but I will reevaluate. I'll have a clearer picture, if you will, in the summertime. In the summertime, I'll have a clearer picture and I'll know if we're gonna go, because I wanna see if we're gonna go into a depression or recession, to be quite honest with you. I wanna see what's gonna happen with that, but I also wanna see how Bitcoin is actually gonna perform there. Because Bitcoin, yes, it's a high risk asset by most people regards, but if that happens, Bitcoin may start acting more like gold. It flips from time to time and it's kind of unpredictable. So I need more time to see this. If you wanna know the chart that I am using, it's called the factor line. Let me just show it to you real quick, just so you know. Give me a second here. So this is the factor line that just load real quick. This is my own indicator we built on the way I trade. The way I trade, which is swing trading and investing, not day trading. You can day trade on this, but it's not made for that, and it's specifically made for cryptocurrency. You can actually scan the QR code right here because it's part of my course, Invest, Trade, and Think Like the Crypto Factor. If you want to learn how to invest in crypto, trade in crypto, and think in crypto like me, like the things I tell you in the videos. If you like my videos and you want to learn, you want to take it up a level and invest in yourself, if you want to invest in you, check out the course right here, okay? And if you can't afford it, if you can't afford it yet, don't worry, I get it. Make sure, instead of that, watch this video up here to learn how to use candlesticks specifically for crypto, because a lot of people are missing this, or watch this video right here for the most important bear market rules that you are missing. A lot of people don't know this, even the pros. So check these videos out and I will see you in the next video.